Today, we will be exposing my $130,000 investing portfolio. Before we get into it, I'm using Wealthsimple, which is the Canadian version of Robinhood. There's a number of accounts we'll go through, such as my TFSA, RRSP, FHSA, private credit, and some non-registered investing accounts. Starting off with my TFSA, we have about 33,000 in here, and overall the account is only up about 3.5%. The first stock that I'm still holding on to and planning to get rid of is TELUS. When I bought them, I liked their infrastructure and I liked their plan going forward. They also have a pretty high dividend yield. At the time, I was chasing mainly dividends, just hoping for steady growth and cash flow into the portfolio. So far, this is down on the cash value. However, I have been accumulating the dividends. I'm just waiting for them to pay off kind of my debts in terms of the returns on the stock value. Once that's done, I do plan on exiting this position. The next one is my biggest holding in my TFSA, and this is XEQT. It's a BlackRock fund that tracks a number of top companies. Mainly they hold companies in financial services and technology. I'll put up the sector weightings on screen now. They also have a little bit of a dividend, but this is one that I'm holding primarily for the asset growth, and I plan on holding this for a number of years. The next one I have is a BMO owned ETF for the Canadian banks. This is ZWB. They have a pretty high dividend yield. This was still when I was chasing these monthly dividends. However, this has been a pretty good buy. I'm just holding on to this one because the stock has done particularly well and the dividends keep on growing. The next one I've got here is another BMO ETF for tech. This is ZWT. They primarily hold top tech companies in the States like Apple, Alphabet, Nvidia, Amazon, Microsoft, and more. I bought this almost 3 years ago and it's continued to do well. It also pays a decent dividend, but just due to the performance, I'm holding on to it in my portfolio. The main reason I wouldn't buy this one if I was starting this portfolio over is that XEQT already has quite a bit of tech exposure. Having a dedicated ETF may just lead to overexposure to this sector, but since it's already in this portfolio and it's doing well, I don't see a point in me getting rid of it just yet. And last one in my TFSA is ZWU. Again, another BMO ETF. This one tracks utilities, and I was primarily holding it for the monthly dividend. This portfolio, if you couldn't tell, was once built to just have cash flow coming in each month. I've slowly been transitioning into XEQT as I exit these positions, but ZWU I've held on to for almost 2 years now. I'll put the dividends on screen. At this point, it's pretty much paid off the losses on the asset value, and now I'm just collecting the cash flow. So this account's my non-registered investing account. It's up about 22%, and I've had it for about 2 years, so it's done about 11% per year. This account's very interesting since I've always dollar cost averaged into it. I've been adding money every 2 weeks into this account in increments of either 250 or 500. The first ETF I hold in this account is VDY. This is a Vanguard owned ETF, and it's got a mix of different holdings in here. The reason I like this one is that it pays on a monthly basis. I know a lot of people prefer the more asset style growth, but I have a little bit of that in this portfolio as well. I found that this has worked really well over the past 2 years, and since this strategy appears to be effective, I'm going to continue with this and keep going into VDY for the next few years. The second entity I'm holding in here is VFV. This is a Vanguard ETF that tracks the S&P 500 index. If you're from Canada like me, we're not able to buy the American version, so this is a pretty good option. There's some other ones available, but this is the one I went for. In doing so, you can see it's returned almost 31% in the last 2 years, which is pretty good. I have some asset growth with VFV, and now I also have that dividend growth I mentioned with the last one, VDY. I don't want to spend too much time on the next one, but I have XEQT in here as well. In my TFSA, it is maxed out, so I don't want to contribute anymore until the new year. However, I want to keep investing in XEQT, and that's why I have this non-registered account. And the last one I'm holding in here is ZWC. I haven't been investing into this one as much as the other entities. At one point, I did like it again for that monthly dividend that I was chasing for a while. The breakdown of this ETF is about 40% financial services and then about 20% in energy, and the rest is scattered across all the other sectors. Now this one, again, it's just paying me monthly. I don't think I'm going to be adding much more to it, but it's already in the account and I don't really see a point in exiting the position now. I might as well just leave it as time in the market's more important. Next one I got is my FHSA. It's up about 10% and there's only one holding here, nice and easy, and it is VDY. This is that same Vanguard ETF that pays a monthly dividend. We've already kind of gone through this one, so I don't want to spend too much time here, so we'll jump over to my RSP. So I have almost $10,000 in this account and I hold a few different stocks in this account. I've had it for about 4 years, and at the time when I was contributing to this, I had no RSP plan through my employer. However, now I do, so I don't add to this account, and I don't plan on it for the next little while. The first holding I have in this account is Enbridge. I like this one because it's a Canadian gas provider, and I've seen it in a ton of municipalities in Southern Ontario. Considering that they were already well known to me and they have a ton of infrastructure supplying most of the homes in the province, I really liked the concept of that, and I thought they had a good customer base. They also have pretty good numbers in terms of their dividend. This one pays on a quarterly basis, but the stock appreciates very well, and having a 6% dividend is just a plus. The next one I have in this account is HDIP. This is a Hamilton Enhanced Multi-Sector ETF, and this one, again, like many of my other stocks, pays a high dividend. So the dividend at the time of this video is 10.92%, which is very high. The ETF is primarily holding companies in finance with 55% of their holdings in that sector. They also have a bit of the fund in technology, utilities, and communication services. This is definitely not one that I will be adding to. This was purchased when I started the account almost 4 years ago, and I've just been collecting that dividend and letting it reinvest back into the ETF. The next one I got here is XDiv. They are a BlackRock owned fund, and similar to the other ones, they're very heavy in financial services. The main 3 sectors that this fund invests in are financial services, energy, and utilities. The next one is XIC. This is a BlackRock owned ETF, and unlike the others, this one is not dividend based, which is refreshing. The holdings for this one are in financial services, energy, industrials, and technology. A few other sectors, but those are the big 3. Again, this is one I bought a long time ago. I'm not crazy about this sector rating that they have, so I won't be adding to it, but just like the last one, it was bought almost 4 years ago, and the appreciation of it has done well, so I'm just riding it out. And last but not least, we have CWC. We already touched on this one as it's in my non-registered account, but same thing, just bought it a long time ago. At the time I was a fan of the stock and those monthly dividends, but now not so much, but it's in this account as well. Now I do have some money in private credit. If you didn't know, Wealthsimple Premium has an offer where you could join with a minimum $10,000 investment as part of their private credit. In this group, there's not a lot of information online. I saw a lot of people weren't happy with their fees. Now, I wanted to try it for myself. If I don't like it, I'll take it out in a year, but I don't have any updates at this time since I just got accepted. But from the looks of it, they aim to do about 10% per year, and the distributions come on a monthly basis. So at this time, the money is just $10,000 flat. Hopefully have some updates for you guys in the coming months. Now, another big holding of mine is cash, believe it or not. At the time, this account was once generating 4.5% interest, which I was pretty happy with. There's a lot of fear with the market and it potentially crashing, so I like to just have a guarantee that I'll be getting a return on my money. Now, Wealthsimple's recently been dialing it back. The interest is down to 3.75%, so I'll likely invest this into the non-registered account in the coming months. Just kind of looking at different options. I still like VDY, XEQT, VFE, but I want to see if there's anything else that catches my eye and before I make a big decision and invest some of this money back into the market. And that is everything in my $130,000 portfolio. Hopefully I'll have a few more updates for you guys in the coming months. Until then, I'll see you next time.